Hi, everyone. Welcome to the Timing Research Crowd Forecast News, episode number 213 for February 11th, 2019. Today, let's see, if you haven't had a chance to look at the report yet, we're going to be discussing the 281st report, which you should be seeing on your screen right now while I'm talking. If you've not had a chance to take a look at this yet, you can go to TimingResearch.com/reports to get the PDF or web version of this report. We are broadcasting live on YouTube at 1 p.m. Eastern Time, but you can also listen to the audio-only podcast version of all episodes now on iTunes, Spotify, Stitcher, Podbean, or wherever else you listen to podcasts. Just search for Timing Research and subscribe there. My name is David Kosmeter. I'm the creator of Timing Research, and let's see, I have Anka Metcalf here today. She's been a long-time guest of the show. You've probably seen her on a previous episode if you're familiar with the show, but she is moderating for the first time today, so I'm going to go ahead and turn it over to her.
Good afternoon, everyone, and welcome. Thank you so much, Dave, for having me here today on your show. It's actually a great day because the market is kind of like taking a pause today so we can all share our thoughts. So welcome, everyone. My name is Anka Metcalf, and today is Monday, February 11th, 2019. And before we start, I want to welcome our audience and I want to welcome our guest. And let's start with a quick roundtable here, and let's have a quick introduction. I'm going to start with Bennett. And before we actually start with the intro, we have Bennett McDowell of TradersCoach.com. We have Damon Pavlatos from Futures Path Trading. We have Mark Sachs from RightLineTrading.com. And it is my pleasure to give the mic first to Ben.
Well, great to be here, Anka, and thank you so much for having me, everybody. It's great to see old friends here again. And, you know, as traders, we sit in front of the screen all day. We're kind of introverts. So it's always nice to be able to get out into a group like this and talk about the markets. Gives us a chance to get our extrovert side out. So it's great to be here. We started TradersCoach.com back in 1998 and kind of went public around 2000. So we've been at this for quite some time. We sell a variety of software tools for traders and educational equipment as well. So a lot of stuff out there. Visit our website. Love to see you drop by. And it's, again, great to be here.
Wonderful, Ben. Thank you so much. We're going to be continuing with Damon. Why don't you share with us a little bit about yourself and a little bit about Futures Path Trading?
Sure. Thank you, Anka. So Future Path Trading is my company. It's a brokerage firm that started in basically in 1995 and morphed into a independent brokerage firm that clears six different FCMs. It's a futures IIB. And also we designed and founded Photon Trader. It's a trading execution software in the early 2000s. And so with our brokerage, we offer all kinds of platforms and different brokerage firms that you can go through. And for myself, I've been trading and running companies since 1977 is when I first started. I got my first seat in 1979, and through that whole point, I've done just about everything from executed for Paul Tudor Jones and Louis Bacon and a lot of big institutional funds, traded for myself, ran companies, and then ended up starting my own. So that's basically a quick one. I don't want to get it into it. There's my bio up on the screen, and you can always contact me if you had any questions about this webinar. I have my info up there as well.
Thank you so much, Damon. It is so interesting. In fact, I think I'm going to contact you in regards to your platform. I myself am a futures trader, so I'm very interested always to see what is out there on the market. So thank you so much, Damon.
Thank you.
We're going to move on to Mark Sachs of RightLineTrading.com. Mark, you have the mic.
Hey, thank you so much. This is my first visit here, and I really appreciate being offered the invitation. My background is in finance. I'm a graduate of the University of Pennsylvania. I'm a former professor at Jefferson College in Philadelphia, and my background is specifically in mathematical modeling. And what we do at Rightline is we determine the independent forces or variables that are at work on price, and determine how price moves out into the future. Place these independent variables in a multivariable equation, optimize it, and then come up with software that has a tremendous future predictive value. I mean, our interest is to determine not where price has been, but where price is going. We have a fairly sophisticated set of software suite, and I run a live trading room. In fact, we have two. The one that I trade in the morning it starts at 9:30 with market open. This morning we made $540 on 3 trades, all off the NASDAQ. Although we trade live. I take all the trades myself, and we also trade crude, but there were just no good crude trades this morning. And then Dr. Keith Wade trades the Forex, and he trades from 7:30 to 9:30, and he's a big seasonal trend guy. And he's also a former professor who studied seasonal trends, and really bases a lot of his day trades and swing trades on seasonal trend patterns. So that's just a little bit of my background, and again, I really appreciate being here today. Thank you much.
Thank you so much, Mark. And I love the fact that you made money in a market that is pretty much sideways right now. And in fact, since the open, it has been like really, really choppy. So it just proves that, you know, precision, mathematical precision is basically the way to go. All right. So last but not least, my name is Anka Metcalf. Today, I'm going to be your moderator. I'm also the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. Also, like Mark, I like to trade the New York trading session open. That is my preferred timing, the sweet spot when you're having all the action. And I love to swing trade equities. It is a love-love relationship for more than 20 years, and I absolutely love swing trading stocks and ETFs. Like I've mentioned, I have been doing this for about 16 years. So I've been a professional independent trader for the last 16 years. And prior to becoming a professional trader, so basically trading my own accounts, I come with 10 plus years of investment banking. I'm also the designer of an institutional proprietary trading system that is based on price support resistance, specific trigger times, and specific price zones and chart synchronicity. And also, if you want to get a hold of me, you can email me at info@tradeoutloud.com, or you can find us on any of these handles, Trade Out Loud on Facebook, Twitter, YouTube, LinkedIn. We post a lot of information on Twitter, real-time information, trading ideas, and invitations to events, et cetera, et cetera. So like I've mentioned, we do focus on educating individuals how to day trade and swing trade. And we have 2 classes that we're offering for futures and for stocks. And we're also providing services like a live trading room for futures and stocks, and also an auto trading program for active futures. It's more of a managed futures program than an auto trading. All right, so enough about myself here. I wanna dive into the questions for today. So, gentlemen, are you ready? Start your engines, because we're going to be talking S&P. which direction do you think the S&P 500 index will move this upcoming Monday to Friday? So by the end of the week, in which direction do you think it's going to move? Are we going to go higher? Are we going to go lower? Ben, I'm going to be starting with you.
Okay, well, let me share my screen here so I can just show you what I'm looking at in terms of charts. Okay, I think you should be able to see it. I'm going to start out with the Dow on a 60-minute chart and then work my way back to the S&P. One of the indicators that we have had a lot of success with is this one right here that I'm circling called our PTF, which is the Precision Trend Filter. And when it's green, it's really easy to use. It just shows that when the momentum gets above the upper band, we have noticed that there is a 75% probability that the high that created that movement above the upper band, there's a 75% probability we're going to return and go higher. Even though you may have a pullback like we've had on this chart in front of you, with that green, it shows we're going to go higher. Now, that's on the Dow. As you can see, we're in a complex correction as well. This is what they call a triple flat correction, it looks like to us, which really started back in October of last year. But now I want to go over and take a look at the S&P to answer your question. If we take a look at the 60-minute chart on the far left-hand side, notice that basically in terms of Elliott wave, we think this is a 3, a 4, and we're heading into a 5 here, which would complete the X high on the 60-minute Dow Jones chart that I showed you earlier. So we think it's going higher. Now, it's a 60-minute chart. It could reach this 5 area in a couple days. It could go sideways and then reach its high by the end of the week. So your question kind of becomes a little difficult. How's it going to look by Friday? And it depends on how fast it gets to this target range. So that's kind of what we're dealing with here. Overall, if you look in the chart in the center, this is the daily chart. The PTF is red here. So there's a 75% probability we do not have a bottom yet in the overall markets from an intermediate standpoint, looking at the daily chart. So I think I'm going to go with, we'll end higher at the end of the week, based primarily off the 60. I give it a confidence level probably of around 75, maybe 80% that will be higher. And I'll be wrong if we reach that earlier versus later. So that's where I'm going with that.
I love your confidence. 75% higher, Ben. It sounds good. I'm pretty much in line with you. All right, Damon, are you ready to share your thoughts? But very briefly, because we're going to be discussing technical levels as we move along.
Okay. Yeah, I have a couple slides, but I'll make it quick. I have to put this disclosure up just for my industry, and you can read it real quick. Yeah, I agree. Actually, with Ben because Bennett, because to a certain degree, but I'll get into that. Sorry about that. Let me just throw up a couple quick things. I do look at volume. It's very important overall. And this is actually a monthly chart, and we'll dial it way down. And this is volume overlay on the monthly, on the daily bars. And for the most part, we're at some pretty good levels here of resistance. We had a nice run up. So I'm going to show you, this is a volume daily chart. And the wider the candle, the more the volume.
I don't know.
Can you hear me? Yeah. Hello?
Sound is perfect.
Yeah.
Oh, okay. Yeah, so the wider the candle, the more volume it shows, right? You could see exhaustion, where we originally broke out. If you look over here at this area here, there was a big breakout to the downside and we moved lower. And these dots are my own reversal dots that I put in that, code, and we can get into that maybe possibly today, or if not, some other time. So, and then we had this move up, but you could see it was low volume, consolidated, and pretty much ran out of steam. So I'm a little bit more on the side that will consolidate to go lower by the end of the week in this particular week, because where we're at, we had low volume on this rally against major levels. If you were to look at a market profile, I'm trying to give you a little flavor of why I'm looking at this. This is the 30-minute today alone, right? And you can see here how we actually have two single spikes. This is the day session. This is the night session. You can see that there's major price rejection up here. And you can see this on the 30-minute. We're in a sell. Now, we're bouncing around. I'm sure that we came back up. This was right before I logged on, and you can see we were in sell, huge volume on the opening, move down, and we're trading a little sideways. So I would have to go back to, with this, if I looked at the dailies, we're up against major resistance. We had a run up, low volume on this run up, kind of climbing the wall of worry, you could see. And it will take some good buying from institutional buying this week to go a lot higher, unless we get some great news. Other than that, sideways to lower, more lower by the end of the week. I'm thinking this is hard to do on a Monday, obviously. And I would say my confidence level is about, there's probably a 70% chance we'll go up, and I'm around a 70% confident that, go down, and 70% confident that the market will maybe try to test a little higher, like Bennett said, but, I think it'll end up lower in the week. So that's my 2 cents right there.
Thanks so much, Damon. I agree. We need a big push in the market. We need some institutional participation. Maybe the trade deal, maybe a tweet is going to do the trick. We don't have a lot of economic events this week, so it's going to be a pretty dry week, other than option expiration, which is pretty much up to its shenanigans. So,
sure.
All right. Thank you so much, Damon. Now we're going to continue with Mark. Mark, if you're ready, give us your vote of confidence here in the S&P. In the S&P 500. I'm so used to trading futures.
Okay. Well, I just want to. I'm just trying to set up the screen share here, and let me see if I can get that done.
Left-hand side. Perfect. Perfect visual. Yes.
Okay. Great. I have to tell you, overall, fairly bearish on the S&P this week for a number of reasons. The first is that I spoke with our seasonal trend guru, Dr. Wade, and February is, over the past 15 years, been a generally bearish month for the S&P 500. So just in terms of that alone, one would anticipate that the S&P would not be very powerful in the month of February, especially this upcoming week and the following week. So that's purely based on a seasonal trend pattern. The second is that I believe some of the fundamentals. Right now, Italy and a couple of the other European Union countries are really bordering on going into a recession. There are big problems with our trade talks with China. I don't see a breakthrough happening. The China market, although it's bouncing a little bit now, is really in a downtrend. The U.S. dollar is on a rocket up, which is really not good for us because it makes all our goods more expensive overseas. Also, there's major Brexit problems in England. So if you look at just the fundamentals, I think you've got a big problem with the S&P moving higher, simply because there's so much indecision. Now, technically, we're really at an inflection point on my software. And I didn't know we were going to get to do a screen share, or I would have formatted it a little better. It's formatted for day trading, and I tried to quickly format it for swing trading. I didn't really do a very good job with it. But so it's not going to tell us as much information as I would like it to. But what we have down here is a Ligier oscillator. Ligier is heading down, so momentum is to the downside. If you see this magenta line here, the middle line is just an assessment of the Ligier, and it's yellow. Although it's yellow, we do have the Ligier heading down, and the upper line is what we call our quant line, and what it does is an analysis. Now, the E-mini is very strongly correlated with the direction of the Dow, the NASDAQ, and the Russell. So what it does is a multi-time frame analysis of all those other markets and tries to put, and 70 to 80% of the time when the E-mini makes a move up, the Dow, NASDAQ, and Russell are going to follow. Right now, we've got a right edge that's yellow, but in general, I think if I formatted this right, we would see that on a much longer term time frame. The Dow, NASDAQ, and Russell are also pointed down. Although I have to say the Russell's been doing well lately and has really been, a mid-cap leader. Finally, our background is a multi-time frame assessment of the E-mini, and this pink here is really telling us that we've got a multi-time frame move to the downside. It ends in blue, but I just haven't formatted it correctly. So unfortunately, I have to sort of discount what the software shows because I needed to format this a little bit differently. But overall, I have a fairly bearish feeling about the direction of the S&P 500. Not only on a technical basis, but also strongly on a fundamental basis, and because seasonal trends point, if we were just in a neutral month, in general, February is bearish for the S&P 500.
So, Mark, if you would give a percentage, what would it be? Like, would you be like more 70% towards lower?
Yeah, I would be. I would be 65 to 70% lower. Okay. Now, if any, obviously it's true for every analysis. If any breakthrough was to take place, and it would change market sentiment and everything would alter. But as things stand now, I'd be about 70% to the downside.
Thank you so much, Mark. And I love the fact that you tapped onto something that I also look at, and that is the analysis, not only in multi-time frame, but throughout all the indices. And I myself apply the same analysis when I trade futures. And I have to agree that February seasonal is lower. But Russell has been the trendsetter and has been the trendsetter since last year. And this is not something that is very typical. But anyways, thank you so much, Mark. So things couldn't be any more diverse. We have Damon with 70% to the upside. We have Mark with about 65 to 70% to the downside. And then we have,
I'm sorry.
Yes.
No, I'm 70% to the downside.
You're 70% to the downside.
I think, right.
Okay, thanks so much, Damon.
Yeah.
All right, 70% to the downside. And then, Ben, are you 75% to the upside?
That sounds good for
All
me.
righty. Okay. All right. Here's my here's my thought on the S&P here. So I'm sharing my chart. I have a weekly SPX here, and last week we had a pretty neutral week, right? So we went up. We actually made a low, and we let me see my cursor here. We actually had a low into the 85, 86 zone, and then we tapped onto a high last week into the 27.39. Now, this week we're opening in the middle, right? So we're pretty much range bound between last week's low and this week's high, right? So we're on that 50% retracement from last week. I think things are going to be a little bit clearer once we trade over this high, the 27.40, and I think if we trade over the 27.40, we will have an acceleration higher. And also, but we also tapped onto, and this is something that I watch on my charts. I also watch the moving averages. The green moving average here is the 50 simple moving average, and the black moving average is the 34 simple moving averages. These are simple moving averages. And the blue is the 20 simple moving average. I find that from my trading career, I have always been using moving averages. Now, more so because of algorithms and everything else. I think that the price, if you're a day trader, the price has a really good read, and it responds really well to these moving averages. What I find is that when the price is captured on any time frame in between these moving averages, things seem to be a little bit more turbulent than usual. It's like a spider web. So the price is caught into the spider web, and the price is fighting really hard to either break above or break below. But here's my thought for the rest of this week. So I'm kind of torn. I'm sort of like 50-50. There's a 50-50 shot for me here for higher or lower. So I'm going to pull out the daily chart. Well, we had a really nice run starting December 24th when we put in the low. We did the slingshot effect. We actually traded lower, and then we punched in. We put a really big, massive bar to the upside onto the 26th, rallied higher, very shallow pullback onto the 3rd, and pretty much we have been rallying ever since. Now, what I see here on the charts is that we pretty much have pulled back into the 2616 zone. We have definitely tried to establish a range. We broke above that range, and we pretty much, the price has reacted off of this 200 simple moving average and came back down to test a new support level into the 2700. Now, going back to the question, do I think the market is higher? Well, today it was positioned for higher. We're trading above Friday's high, which we know that Friday was a pinch lower. As you can see, this low right here compared to Thursday. So we accelerated a bit lower on Friday, but we had a massive recoup, which was pretty awesome. At the end of the day, we saw the indices just pop really, really hard into the close on Friday. It was almost like an algo push. And I think in a sense, it was an algo push higher. But the overnight trading activity took the price actually a bit higher, and we made a new high. So we actually triggered a pullback buy. So a definite daily rotation here. I'm also monitoring like big market participants. I'm watching stocks that are big components within the indices, so I can pretty much track down what's strong, or what has relative strength, and what has relative weakness, so I can see the overall market structure. So if I could determine whether we're going to get a push higher or lower. From today's price action, I think that we're quiet down, and I think that we're basically going to have a quiet week moving forward. I think that overall, as long as we're going to be holding the low from Friday, and we have the 2700 in the SPX, we're going to try to push. We're going to try to push higher. So I think that the way I see the market right now, I would go for a 65 to 70% higher into the end of the week. And now the thing is that we don't have a lot of econ for this week. But I think option expiration is going to be the focal point for this week. So that's my take on the market. So I think that we may go higher. Now, interestingly enough, on the participant panel, 62.5% of the traders have responded higher, and 66.3% have responded lower to the market. So I find this very interesting. And so again, I'm basically a part of the 62.5% that think the market is going to go a little bit higher here. All right, so thank you so much for the answer.
Hey, Anka, I think I think you were looking at the wrong numbers that's
really?
So that was.
Oh, I'm sorry, 31. Oh, yes, I got the numbers wrong. 34.1% have answered higher, 65.9% lower. I'm sorry for that. Yeah, that's very interesting. So the majority of our participants mentioned that 65.9% we go lower. Okay, so Damon and Mark, you're part of the 65.9%. Very interesting. So, all right, we'll see how the market is going to, but don't forget NVIDIA earnings, right? So that might have a say. All right, so let's move on to our next question here. And since we have detailed all the reasons why we think the S&P may be going higher or lower, do you have any other? So I'm going to go very quickly and ask, do you guys have any reason, any concerns about the market as we're moving into the end of the week? What are the things that you're watching for that could actually state your decision? And I'm going to start very quickly with Ben.
Okay. I guess let me show my screen here again and get back over to the S&P real quick. I can figure this out. Okay, there we are. All right, now let me bring that chart up again. All right, so we use a variety of indicators, all of which are technical analysis, of course. And I rely on the Elliott wave, been doing that for quite some time. And I also rely on fib extensions and retracements for target zones, and then developed a suite of indicators, which you can see on the chart here. Some of the indicators, which we call the applied reality trading system, puts basically detects price patterns, all right, and then draws these little triangles in the direction of the trend, which you can see on the chart. And then we have some indicators at the bottom we use to confirm the signals that the ART system generates. And one of the ones that we pay attention to, again, is that PTF one, because of such the high probability rate. When it's yellow, it's neutral, so it means nothing. But when it's green, like here, it again has a very strong probability of 75% of being accurate. And it's in a case like this, it's telling us that, hey, even though we've had a little bit of a move down, all right, this high here, which represents when the PTF actually turned green here, all right, has a high probability of not being the final high. So we should see markets move back up into that direction. So I really never trade against that, Anka. I always use that if it's available to try to figure out a trade in the direction of the PTF. Now, it depends on what the price is doing and if I can get a good entry and whatnot. But that's kind of how I mark a lot of my analysis. Then I look at momentum too. All right. But sometimes I'll even go long if the momentum's negative, provided we've had a significant enough of a pullback into a fib retracement zone. And for example, something like that would be on this SWKS stock. When we first went long on this, the momentum had not turned back in this area, had not turned green. Okay. But it was a pretty good, the other connecting of the dots of the other forms of technical analysis we use, Elliott wave and so forth, indicated that this was the fifth wave inside the third wave, and the momentum to the upside was actually increasing. So at that particular point, we were not trading against a red PTF. So the long position was taken on the initial breakout here. So there's times when you try to connect the dots and get them all perfect, but they're not. But there's certain indicators that have more weight than others. And that's part of learning how to use your software tools. And I think for everybody here, you know, there's little tips and exceptions on how to use the tools that we have that you gain over experience. So I think I answered your question, but I'm not sure.
Yes, absolutely. Absolutely. Thank you so much. Thank you. I appreciate it. All right, let's move to Mark. Mark, do you have anything to add here? Just to a specific reason why you think the market is higher or lower?
I do. Yeah. Again, I'm not in a position to show the software. I haven't formatted it for a longer term analysis. But I think in order to determine where the market is going to go, I think what we need to do is we have to look at proxies for big money. So what I do is I have two data feeds that I rely really heavily on that are really not involved with the stock market. One is Benzinga, and the other is Options Monster. Because what I want to do is I want to see where are the big institutional traders? Where's the big money going in terms of placing their options trades, say a month out, 6 weeks out, 8 weeks out? That's going to give me a really good idea of where they believe that the market's going. And what I want to focus in on are those stocks which really in some ways act as proxies for the direction of the NASDAQ and the S&P 500. And I do this analysis every night. And I have an options alert newsletter, and we do really well. We run about an 80% win rate, because basically all I really do, I'm just a copycat. If I see institutional traders moving in on huge repetitive buys on a given instrument, whether it be a Forex pair or a stock, I'm going to follow them. And what I see right now is commitment of traders is negative, and I see all the major positions. If they're short term, if they're bullish, they're very, very short term. If they're short term, they're bearish. If they're longer term, it's a little more uncertain. But my gut feeling for what I see in terms of options positions being placed in both of those platforms is I see a real negative tone being taken by traders going into options expiration week on Friday. So that's the thing that I really take as really a negative, sort of a proxy. And the one thing that and I agree with is that we're dealing with a big neural network where all of the markets are linked. And I don't think you can take a look at one single market in isolation. Like she mentioned how the mid cap markets, the Russell, has been a proxy for the direction of the market. Well, I think it's observations like that are really key. And really, what goes on in the course of a given day is that institutional traders rotate their money from asset class to asset class based on their perception of risk. And that's the same thing that goes on over the course of weeks to months. So right now, what I see is a rotation of money to the negative, more action to the put side, and that's really the additional information I would take. I would give you to that I believe backs up my position that I think the market's going to move lower.
Thank you so much. And I have to agree. I think it's time for the market to take a pause, or even a pullback. If we want to progress higher, we definitely need a good platform, a launch pad to start building up positions again. I think we're already, and we had a really fantastic January. Last year, 2018, January was phenomenal. Before the volatility started on February, I think it was February 2nd or 4th. And once again, January was very, very, very bullish. Now, I want to ask Ben if he has, Ben, are you here? Do you have anything? Yeah, hi.
I think you skipped me.
I skipped you.
Yeah,
Sorry, it was not my intention. I want to ask you, what are your thoughts about the S&P, and do you have any reasons to think that the market is higher or lower going into Friday, or do you think it's going to pause?
Now, who's that for?
It is for Ben.
Okay, so I'm sorry. So ask me that one more time because I thought you were asking somebody else.
Oh, sure, no problem. So I wanted to ask you if you have any specific reasons that you see the market, the S&P 500 index, move higher into the end of the week or move lower. What are your reasons behind behind the move of the S&P going into the week, going into Friday?
Yeah, I think as I stated, I think it's going higher. And I think we are overall in a longer term trend, it will be lower. But by the end of the week, some of the indicators that we look at, and again, the PTF, like I was describing before, indicates that we're going to get a higher high before we begin a more significant sell-off. So whether that high comes tomorrow, because this is a short-term chart we're looking at, a 60-minute chart, whether it comes tomorrow or Wednesday, really hard to say, but it could go sideways for a little while and perk up later in the week. But it is showing that it's going to go higher. So that's why I indicated higher by the end of the week, and not with anything more than like a 75% probability.
Yeah, and I like that. I like that thought. And like I said before, I really think that the market needs to digest this 2,700. I think it's also psychological. And the more we consolidate here, I see the market pushing a little bit higher. I see that so far we're getting close to 2 p.m. Eastern, and the markets are not giving up. They're still holding. Basically, Russell is holding the best, but S&P is still holding that 2704, 2705 level intact. So as long as it's holding it intact, I still think that we're going to be pushing a bit higher. Definitely a tug of war between the bulls and the bears today in the market, with Russell being the strongest index. All right, so let's move on to our next question. We're running out of time here. Okay, so I'm going to start with you, Ben, since you're still on the mic. The following question is in regards to your trading beginning and your education. So who have you learned? Yeah.
Did Damon, did you get to respond to that last section?
No, I didn't, and she kept
Damon,
going. So that's okay. I mean,
Damon, I'm sorry.
I got things to do. I don't have to be on here. You know.
I'm sorry, Damon.
You guys are going to town. It's okay. You know, I can do the next one. You know.
No, I'm sorry. Can you please share your reasons? Why do you think the market is bullish or bearish into the end of the week? Because you stated that you're 70%. You think that 70% is lower.
Correct. Well, I pretty much I was ready to just log off, to be honest. Well, you can see my screen. Actually, the last question was more about, do you see any particular problems going into the last week? And I wanted to point out that the night sessions have been pretty informative. In fact, they've had some bigger ranges in some ways. Like yesterday, we had a bigger range. You can see we're inside the night session, and you can see that we had double distribution. This is the night session here. And then this is actually, I broke it out for those that don't know market profile. This is volume. These are 30-minute bars for today with volume profiles next to them. Just something I look at. But for the most part, keep an eye on the night markets, because it seems overall, if you look back, like even here, you know, this is the consolidation, double distribution, pretty big ranges at night, that the markets, you know, are more volatile looking at our markets more than we've been, except for like a couple days. But this shows that the high was put in here and failed. We didn't even get close to it. The low was put in here. We didn't even get close to it. These are the big volume areas that we got to watch for. Low and high volume areas are very good support and resistance but I'll keep it short because we don't have much time. That's my 2 cents.
Thank you so much. All right, so let's continue. I hope everybody had a chance to answer all the questions. All right, so now that we're moving forward, let's tap a little bit into trading education and style and teaching style. And I'm going to start with Ben, if you don't mind, to come back on the mic. And I'm going to ask you, who have you learned the most from about trading or investing? Who has been your role model in trading?
Oh, that's a good question. Actually, you have to go back probably into the late 1980s and 90s. And I studied in the beginning with a guy by the name of Bill Williams, who since has retired. And he was into Elliott Wave, and I learned a great deal from him. I took a lot of what I learned from him and developed approaches to the market, and eventually designed that into software and so forth, which is what we use today. But I got to tell you, one of the important things I think in trading, the most important thing is, you know, everybody has a system, everybody has an approach that they feel comfortable with, at least I hope they do, and that they have trading rules for, and they've tested those rules. But, you know, you have to have good risk control because we're not right all the time. I'm right probably 65% of the time, which is actually pretty good. A lot of people think, oh, that's terrible. But actually 65% is decent. And if you have risk control, all right, it's a home run. So you have to realize that you're not going to be right all the time. But if you have good risk control to keep those losing trades small and let your winners run, you'll do real well. You need to test your system a lot. You need to make sure before you go into the markets with real money that you have a winning approach. So don't be too anxious. Be patient and go in there with a system that has an edge. Because if you don't, you're going to get eaten alive, plain and simple. Markets are true capitalism at its best. You're either right or wrong. Doesn't care about your education. The markets doesn't care where you came from. Doesn't care what education at all you had. As long as you're right, you make money. When you're wrong, you lose money. So that's actually pretty good. So no politics, no nothing of that nature. But you do have to be ready and be prepared when you enter the markets, and you have to have good risk control. So I think that's really important. And I think ongoing coaching is really important. I provide that service now for a lot of traders around the world. You know, with the technology today, you can do that just like we're doing it today, right next to each other. It's almost like being right there. So you're not limited by where you're located any longer. And I think you need a good support system. I think when you purchase software, you have to have some place to go to learn how to use it. And that's one of the pet peeves that I've really tried to develop at TradersCoach.com is when you purchase software, we just don't say goodbye. We have weekly ongoing webinars that are free. You can come and ask questions. We look at markets. I think you have to have that constant support all the time. So support and risk control, I think, is the two real important things.
Thank you so much, Ben. I liked what you said about being right only 40% of the time. I could still make a killing, and that's because you're applying the proper risk to reward ratio.
Well, right 60% of the time.
Right, I'm sorry, right 60% of the time. That's true, and that is the risk to reward. That's key in trading. All right, we're going to move on to Damon. Damon, do you have a role model in trading, or have you learned, who have you learned the most from about trading or investing in your trading career?
So, yeah, that's an interesting question because after 41 years, I was privy to executing and working with some of the big institutional traders. And I would say out of all of them, for starters, Paul Tudor Jones was definitely gave me hands-on a little bit more. I mean, I had a charting service in '81 that I started, and I was executing for him in '86. But he definitely gave me a whole other insight to the market. I'm married to Linda Raschke, but she was a client of mine in 1991, and you know, I picked up quite a bit from Linda, and we share a lot. now that we're married, of course, we have a lot of the same insights, but she's still, very amazing, and has some. She's done very well for herself, and I've learned quite a bit from her. But there's multiple institutional traders that I learned from, and as far as mentoring, and our brokerage is, primarily we let you do what you want, and our software, you could trade 20 different softwares, but you can use our software. But I do some personal mentoring just on a one by one, on a one-on-one basis. I do some of that. That's not my main business. It's more so that for those that really would like a little look at not only how they're trading, what they're using, and give them some insights there, but also execution is something that I think is so important. You've got traders that execute and they buy the offer and sell the bid, or they buy market and sell market, and they're over a year period they could be saving $5,000 to $10,000 if you just trade ones and twos. So that's also something that I offer. But we do a lot of webinars with my company, a lot of educational webinars. Linda's on them, multiple. We'll have to get you guys on them, and because we want to help our traders that clear us, and our customers, because if you make them better traders, it's good for everybody and it's good karma. So if anybody out there is interested in any free webinars, I actually am doing a bunch of them this month. You could just email me and we'll include you in on the list. But that's that's pretty much it. I mean, I don't know if, did I answer the question properly? I'm not sure.
Absolutely, Mark. Absolutely, Damon. Thank you so much for your answer. I think it's so important that every trader has the support that they need in their trading career, because you cannot succeed alone, and then you're going to be running in circles. You're going to be a liquidity provider to the market, and it's better off to start with the right approach to trading, with the right education, and then develop your style from there. I'm going to move on to Mark. And Mark, can you share with us who have you learned the most from about trading or investing?
Sure. In order to, I'd like to share my screen for a second, if I can figure out how to do it.
On the left-hand side, you have some tabs. The second tab, the green one, I think I could see Mark.
Yeah, we're seeing your chart now.
Yeah. Okay, you're good.
Okay. Basically, I really learned almost everything that I apply from a man by the name of Alexander Elder. He wrote a book, I believe he wrote it in 1998. And what he did was he was the first person to create what's called the triple screen method. He believed that looking at price from your trading chart only provides you with no forward-looking ability. Tells you where price has been, but it does not tell you where price is going. So he developed the triple screen, and what he looked for was an alignment of whatever you're looking at, whatever force you're looking at that moves price, to align on 3 separate time frames. One is the price of your trading chart, but you have to look at 2 higher time frames in order to get forward-looking ability. And that's really all that we've done in a very, very, I think, sophisticated way. We've also acknowledged, I believe, what Anka believes, and that is that what we're in is really the markets today are completely different than what the markets were like 15 years ago. 15 years ago, the percentage of total volume that was institutional volume was small. Now, the percentage of total volume in any market, especially the futures market, that's institutional volume, is exceedingly high, stocks as well. So what all we can do is track the footprint of institutional money and get on board with them, and try to get on board with them as fast as we can. And this is what our software allows us to do. And I just wanted to really, I'm not going to go into a big analysis of this, but I wanted to show you my first NASDAQ trade this morning right here. It went 9 3/4 points. And if you look at these two lines here on multiple time frames, this is 6 separate time frames. We're looking at the direction of the Dow, the Russell, and the E-mini S&P 500. When I take a trade on the NASDAQ, I want to trade when it's moving in the same direction as the 3 other strongly correlative markets. Now, the NASDAQ is going to make winning moves sometimes when it's not in that direction. But those are higher risk trades, and I want to cherry pick my trades. So I knew when I took this trade long that on a multi-time frame analysis, I had the Russell, I had the E-mini, and I had the Dow with me going long. I also had the Ligier with me going long. You can see that's the lower green line. Background color tells me that the NASDAQ was moving long in a multi-time frame direction. These dots are also just a different analysis of the NASDAQ, of the Russell and the E-mini S&P 500. So I want to take a trade in the direction of all of my correlative markets. Essentially, what am I doing? I'm looking at the direction of money flow. I am looking at the way the institutional traders are thinking. If they're pushing up all of these markets at the same time, I'm on board with them and I'm going to go long. The second trade was right here. It was right off of the open. We had a pullback into the open. I went short and went 8.5 points. Now, the multi-time frame assessment of the Dow, NASDAQ, Russell was to the downside. The Ligier was to the downside. The multi-time frame analysis of the NASDAQ was to the downside. And this purple halo is a multi-time frame analysis of momentum, stochastic, and order flow. We use market delta on 2 higher time frames and calculate a delta moving average. So I was moving in the direction of the multi-time frame analysis of multiple independent forces that move the market. The third trade, which I was really hesitant to take because we were already up good money, was right here. It was a little riskier. The Ligier wasn't locked down, but it was moving down. I had my longer term time frames, the upper line. I mean, my longer term I didn't, but I took it. It went 5 points, and it got me through my first target. But what we always do is we trade in the direction of the correlative markets on a multi-time frame basis. And what we're trying to do is simply follow in the direction of institutional money. I'll just show one more trade that came in later that I really, really liked. And it was right here. I mean, right here to the pivot, forget it. The pivot stopped the trade. We never trade into unbroken pivots. Pivot breaks right here on this candle, 2/3 candle close. This went 13 points. Now, I didn't take that trade because I was done already. But I just want to give you the flavor for what we're looking for and what I believe is operational in the market. We want to trade with indicators that are proxies that work on a multi-time frame basis, that track multiple markets, and are giving us an idea of what institutional traders are thinking. And that's really the direction that we want to trade. If we get 3 or 4 perfect trade setups, I'm just, tickled pink because we have a very, very high likelihood of getting a winner. On a trade like this, on a pivot break, I'd say upwards of 80% that thing is going to at least get a first target. So that's really, it was really Alexander Elder and his triple screen method that has really led us to evolve into this type of program. I believe you must do a multi-time frame analysis, whether you day trade or swing trade, in order to get an idea of where the market's going.
I agree, Mark. Thank you so much. And I don't believe that you can trade without looking at your multi-time frame charts and perform a multi-time frame analysis on anything that you're trading, whether it's currencies or futures or stocks, ETFs, Bitcoin, whatever it is. You have to see how they interlink and how they move, whether you're having chart synchronicity or whether you're having chart divergency. I know we're running a little bit late, David. I want to know if it's okay if I give my last question here. And I'm going to answer very briefly about my trading and my beginning, who I've learned from. I think it's like a work in progress with trading, because you need to, learn how to. First of all, you need to learn and then develop your edge. Because at the beginning, you're offered a whole lot of information, and then you have to sift through all that information and pretty much determine what kind of trader are you, whether you're a swing trader or a day trader. And basically, I had a lot of mentors within my trading. I can't give like names because there were definitely a lot of mentors, but I can give you one name that absolutely made a difference in my trading, and that is Van Tharp. I love his books and his education. I think it's phenomenal. You're going to learn a lot about risk, and not only about risk, but about management and everything else that goes into a good trading plan. So, David, I'm going to go with the last question, and we're going to keep it very...
If you all want to combine the last two, a quick closing statement, and if you have a trade idea you want to share,
thank you,
we can
David.
put those together.
Yes, we're going to start with Ben. So, a trade idea, and what are you offering this week, or do you have any promotions, any webinars that you would like to invite the guests?
Yeah, sure. Okay, great. I'll make it quick because I know everybody's got to get going here. All right. One of the stocks that we like is AMD. We recommended this actually about a month ago, and it seems to be heading towards its target zone. If you look at the chart in the center, this is a daily chart for the intermediate trend. This is a 60-minute chart on the left for the short, and a weekly chart for the long-term trend. And there's no red in the PTF area, which is a good thing. And so if we put up an Elliott wave target with a fib extension, we're looking at around 33.45 to 44.32. You want to put your stop no closer than this level here, and then adjust your trade size accordingly. So if you get stopped out, your risk is in line with your trading account. So usually, as a rule of thumb, no more than 2% per trade on the losing side. So that's one we like. It's AMD right now, and should get up into that target zone over the next few months. Long term on the weekly chart, we have a green PTF, so it looks like eventually it should climb up over 35 based on this one indicator, and that would, of course, put it into the target zone as well here. So that's my trading idea for right now. In terms of things that we offer, come by our website, check it out. We got a lot of free stuff there. We offer software tools, educational courses. I've written 4 books available at Barnes & Noble or some of the major bookstores there, Amazon, for example. You can check them out. So there's a lot of information out there on our software tools and on how to trade the market. So once again, pleasure to be here. Thank you very much for having me, and great to be with all the rest of the speakers here.
Thanks, Ben. Damon, we're going to move very quickly to you. Do you have a trade idea for this week, and what do you guys have going on Futures Path Trading?
Yeah, so hang on a second. There we go. For the most part, you got to let the market dictate the trade. We're in a downtrend currently. If you look on this daily here, you can see other than this little sideways correction, this has been, for me, straight up until here. Now we've got this sell signal on my stuff, and it's that's something I look at. When you have a 3-bar reversal, and we took this out, but I am looking for a kind of a move down into this area right here. probably holding around the 26.15 area, something like that. So, if you're looking at a bigger risk kind of parameter, you want to put your stop probably somewhere above this most recent high, and look for that area of 26.14, 15 area. And as far as I did want to mention one thing, because I know we're out of time, and well, one thing I wanted to put up here is Linda Raschke. This is my wife, but she's been around for 35 years. I think most of you know her. She just came out with a book. If you're interested, Trading Sardines. It's a great read. A lot of stories, a lot of lessons learned. She hasn't written one since 1991 because she was busy trading. In fact, she had 120 million under management in between 2008 and 2011 and did very well, just on her high watermark. And then Future Path Trading, if anybody's interested, that's the name of the company. You can go to our website, futurepahtradingllc.com, or what you should do also is contact me if you're interested in any webinars, or that I'm doing a bunch. I'm doing 2 live ones weekly. We're bringing in educators. You learn a lot. They're free. We used to have it only for clients, but that's my information. So
thank you. All right, we're going to move to Mark. Mark, do you have a trade idea for this week, and what's going on with Right Line Trading?
Okay, well, listen, I'll be real brief. If you send an email to info@rightlinetrading.com, we'll give you a free week in the trading room. We'll just let you walk in and observe our trading and watch us make money. And I just want to give you really quickly 4 of my top 10 stocks for 2019. And my number one is Zuora. The ticker is Z as in zebra, UO. It's a company that is allowing huge companies to go from whatever billing model they have now to a subscription model. And that's really the wave of the future. It's around $21 or $22 a share. I see it as a doubler for 2019. My number 2 stock I love is Palo Alto Networks. Cybersecurity is huge, and I think it's numero uno. And the third one I'm just going to throw out there is Spotify. The reason I like it is because I love it, and I have a Spotify account. I'm not a millennial or a techie, but once you create your playlist, you are a Spotify guy for life. You're never going to leave. You're stuck. You're just stuck there like glue. They're going to have some headwind because you've got Apple Music and other companies that are nipping at their toes. But I think Spotify is the class act, and so my 3 are Zuora, Palo Alto Networks, and Spotify. I have others, but just to keep it short, I'm going to leave it with those 3.
Thank you so much. All right, so I'm looking at 2 stocks. My 2 picks so far for this morning were SQ for higher. I'm going to give you quickly the parameters: 75 by 70, 75 by 70 for a trigger higher. The stop $70. And I'm looking for a target into the $80. And the second that we already have on, it is AMD, $23 over $23.32, and this is a long, and the stop $22.26. We're looking at targets into the 25 to start with. So I just want to thank you, everyone. Thank you so much, David, for having me and for having all of us here. It is really great to share our ideas and to talk about markets. And David, you have the mic.
All right, thanks everyone. Just a quick reminder, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. Also, you can go to TimingResearch.com to get access to any of the past shows or reports. Be sure to join us for the next episode of Analyze Your Trade, which is going to be tomorrow, Tuesday at 4:30 p.m. Eastern Time. George Papazov, Jim Kenny, and Michael Filagera will be on for that one. And I just want to thank my guests again for this week. Bennett McDowell of TradersCoach.com, Damon Pavlatos of FuturePathTrading.com, Mark Sachs of RightLineTrading.com, and Anka Metcalf of TradeOutLoud.com. Thank you for mentoring or moderating for the first time, Anka.
Thank you so much. It was actually a tough job because I was trying to look at charts and doing this. It's not easy.
Yeah, it takes a few times to get used to. But
I know. Thanks so much,
it was
guys.
a great show, though. So thanks, everyone.
Thanks, Dave.
Thank you, everybody.
Thank you, everyone.